Hi, I'm Shane Bangle with Manna Group, and today I want to talk a little bit more about investment properties. I know we've talked before about cap rate or capitalization rate and cash on cash return. So I'm going to look at two properties today and kind of give you some assessment of them based on cap rate. So we have one property here in town. It is a duplex. It's listed for $289,000, so fairly low purchase price, which would mean a little bit less on your down payment, a little bit less cash into the property. It's a two-unit place, so an upstairs unit and a downstairs unit. Both of them are 2-bed, 1-bath units, and I would say the home is just a little bit older. So, maybe some delayed maintenance to factor in if it was an investment property you're going to use. The second property that I'd like to compare it to is a triplex, so 3 doors, varying. It has 2 units that are 1-bed, 1-bath units. One of them, 2 units that are 2-bed, 1-bath units, and 1 unit that is 1-bed, 1-bath unit. All varying sizes. It is originally a single-family home converted into a triplex. These are very common in the Spokane area. That's the same case with the up-down duplex I mentioned before. Each of them come with varying rates of rents. So those are important factors to factor in when you're talking about considering your investment. Purchasing investment properties is very, I'll say, unemotional and should be. It's just a logical, hey, what is my investment? What's my time investment? Like, how much energy am I going to have to expend to manage this investment? And then what's going to be my return? When we're comparing, I'm going to pull back here a little bit, when we're comparing investing in real estate versus the stock market, I would say kind of some of the standard comparisons are that when you invest in the stock market, you're looking at 8 to 10% returns on your money. It's very hands-off. So you put your money, you buy index funds, you buy specific stocks for a company, and then you hope that that grows and occurs at about 8 to 10%. Real estate, it can fluctuate, but as you average it, just like the stock market varies, as you average it over time, it's somewhere in like the 4 to 5% growth on appreciation. That's just the property itself. So that doesn't take into account that if you are exerting more energy, meaning having tenants in there that you are managing and directing, or hiring somebody to manage, which takes away from your profit, that rate of return starts to get substantially higher. I would say into the 12 to 15% return on your money, but you have extra work to do for that extra return. So these are things you balance when you're saying, hey, where do I want to put my money in to invest and grow and work for me? Like, if you have extra income, which we're not all blessed with, but if you have extra income, that money should go to work for you and create passive income. Very huge proponent of that. I think we should all work to that. So getting back to our 2 homes, I'm going to talk about cap rate. So cap rate is a very simple calculation. It just says, what is the net operating income divided by the purchase price? For today, I'm going to talk about purchase price, like maybe just the complete purchase price, or what the amount that you're borrowing that is, would be 20% down, so 20% less than the purchase price. So on the triplex, you have 3 units that are being rented. The total rental income is somewhere around $3,200 as you add up each of the units. Annually, that rental is $38,940. So that's the number we use of the gross income. When we talk about net income, we have to subtract expenses. So expenses are property managers, vacancies, repairs, all those things. For the purpose of comparison, I just use 20%, and that's a pretty safe number to use for any kind of vacancies or general maintenance that you're going to have on the property. So that takes the income down a little bit, but as you say, okay, if I compare it to purchase price, the 425, this one's listed for 425,000, divided by, or my net operating income divided by that purchase price, comes back with about 7.33% So 7.33 cap rate would be a common statement. If I divide it by the loan amount, which is like $340,000, that cap rate goes all the way up to 9.16. So everybody uses and calculates their cap rate differently, but you're talking about somewhere between 7 to 9% cap rate. Generally speaking, my rule of thumb, if I can get an investment property at a cap rate that is 1% higher than current interest rate, so currently interest rates are right around 7%, so this property falls very kindly in that, depending on how you're calculating your cap rate. I'm particularly fond of this property. I think it is pretty well maintained. It also has some upside. The one unit could be remodeled and the rents could be increased, so you also have some room for some growth, which is quite nice. So this is a very nice property. Now, if you were going to purchase this property, 20% down of $425,000 is $85,000. So you have a upfront investment cost into this property that, yeah, is a substantial amount of purchase price. Now, $340 be about $2,800 a month in a mortgage payment. So or maybe slightly under that, give or take a little bit, but your rents are, $3,200 a month. So every month you would be profiting about $400 every month as far as like a cash flow return. That's not accounting for what the property is doing appreciation wise, paying down the principal on it. So overall, a fairly nice property. Now in comparison to the duplex that's listed for $289,000, the net operating income, okay, you get rents that are right around like $2,200 on this property. I calculated the total rent income to be $25,440 annually. So again, if we take away the 20% and then divide it by the price of the home, $289, we're coming out with like a 7.04 cap rate. If we divide it by the purchase price, that's just the price minus the 20% down payment, which would be $231,000, you're going to get a cap rate of 8.8%. So on this property, we're very similar, maybe just slightly lower on our cap rate, right in the 7 to 8.8, right? The other one was 7.33 to 9.16. So very comparable. Your 20% down payment on this property is only $57,800. So in comparison to 85, there's less money to be put into it. On your cash flow, 16, probably looking at a mortgage payment around like 1850, 1900, and you're getting rents of like 2200, so you're in the 350 range on a cash flow on a month-to-month basis. You're making $350 a month. So you can see these properties are very comparable, very similar cap rate. They're a little bit less cash flow, a little bit less cash invested. One's a little bit more and a little bit less. So when we compare these, we don't just say what's the cap rate. It doesn't matter. There's a lot of other factors that have to go into the equation, saying, okay, what's the condition of the property? What's the condition of the tenants? What type of tenants will rent this property out? And for all of those reasons, I prefer the triplex over the duplex. You have existing tenants in there that are been in there a little bit longer term, so they're probably likely to stay, and you have less turnover and less vacancy, which means better return on your money. The property itself is more well maintained, so you have less delayed maintenance, and then you have a little bit better upside, like with how the house is laid out. And you got to think about how does a home and the units lay out? Are they rentable? In the duplex, there were a bedroom that you had to walk through the bedroom to get to the bathroom. That can be a deterrent when you're looking for tenants. So it's all these, we can look at just the numbers, but then you have to factor in quality of the building, the layout of the house, type of tenant, location in town, how likely you are to have vacancies or not vacancies. So we at the Manna Group tend to be, we like to dive into these things, answer these questions for you. If you have any additional questions on what investments look like, what are profitable investments, what are lower headache investments, we'd love to have that conversation with you, because there's other action plans. I have an investor who likes to buy just new construction homes and turn those over time, and that's a low headache, low maintenance investment for him. So lots of different options out there to choose investments. Please feel free to reach out with any questions you have.